All right, hello and welcome, traders. Hey, it is July 10th, 2025, Thursday. Hey, another great day in the market. This market right now, unrelenting and unstoppable to the upside, knock on wood. I keep waiting for a pullback and it ain't coming, or at least it hasn't been coming. I really want to get into some more longer term trades, especially some other trade opportunities. And I'll tell you what, I'm a little hesitant up at these lofty levels. However, we are in plenty of trades. So don't get me wrong, there's plenty of trades going on. And in the small account today, we are up over 23% on the year. S&P is up 7%. So we are tripling what the S&P is doing on the year so far in that account. And in the trade tracker for our income navigator account, well, let's just jump into that since we haven't really looked at it in a while. Like to do that. So we're really pretty delta neutral right now with our mix, and we'll talk a little bit about the mix, and we'll talk about some of the trades. 375 delta, 1108 on theta, which is 0.34, which is not bad. Netlick ran up again to 324. We are now up 3% on the month. We were up almost 12% last month, 12% the month before, I believe. Oh, 9% the month before. So doing really, really well on these accounts. Cranking away here. BP usage is in pretty good shape. We're in the 50% range when you take our bill positions away. I'm all good. I like it. And I like the deltas that we're at. So we're in pretty good shape. If we look at the different trades that I have going on right now, we'll start at the bottom because this is our spot here. The 112 trades, the 112 calendarized versions, we've got two left running. Everything else keeps coming off for our winners. These are doing really, really well. So I expect one to come off probably next week or so, and we'll be putting a new one on. So at any time, we're maybe 2 to 3 of these trades at any given time, which has really reduced our quantity, which has really reduced our exposure to any vol or sell-off events. We've got a lot of put debit spreads on 100 wides. We've got what, two, four, six, eight, nine of them running. So really good trap opportunities if the market does pull back. So we're ready. Uh, we're ready. The market pulls back. Pretty happy with where we are. Uh, if we look at the income poor man covered call trades on SPY and the Qs, we're allocated a little underneath where we should be. I've got about $31,000, and my target is about 44,000 according to my trade plan on it. So I'm a little light, and I really want to add. I just am having a really difficult time adding at these levels, even though this trade doesn't really care what the market does. It's better if the market's at least going up or sideways versus going down. However, I'm going to show you a trade today, and we're going to do Tesla today. We can also do SPY if you want. I'm going to show you two ways of using the income poor man covered call trade that we've been doing and why it doesn't matter what the stock does. It can go up, it can go down. It really doesn't matter. It can go to zero, and we're going to make really good money on it. So I'm going to come out with something, show you what would happen in Tesla if we actually went to zero, and how much money we can make on that. We do have a couple other income poor man covered calls on other, which these are really spec trade category, but I'm allocating about 26 grand for those. I'm a little over here, so it kind of makes up for it. I'm at 48, and I've only got two, IBIT and MicroStrategy or Strategy. I'm a big Bitcoin fan. If you're not paying attention to what's going on in the after hours tonight, Bitcoin is up now 4% in the aftermarket or after hours market right now. Ethereum is up almost 7%. IBIT is up almost 2 points right now, or a little about a point and a half uh, after hours. So tomorrow is going to be a printing day. So tomorrow's going to be a great day for our underlying long assets. That'll be fantastic out there, and I'll show you why it doesn't matter go up or down. Either way, we're going to make money. But if the underlying goes up, we make even more money. And spec trades, we've got a bunch of UNH trades which have just been printing, doing great. Gold 112, oil 112, a Tesla naked put doing fine. That's pretty much it. And the gold jade lizard as well. Really good uh, for us. Those are our core trades right there. So you see most of what I'm doing, which is the 112 calendarized version. We got the income poor man covered call, the core trades on SPY and QQ, and then we've also got uh, a standard income poor man covered call, which is not the same as a standard poor man covered call. It's the income version that we do. And then we have a variety of spec trades out there, mainly some naked puts and some 112s on futures. We did a review today. I'm not going to go through it. You know what? Let's actually take 2 seconds and go through some charts and some trade opportunities. I'm going to run through this really, really quickly with you because I feel like we haven't done this in a while out there. So if we're looking at ES today, we had a nice day in the market, 17 points higher overall on the day. And then we're up a little bit in after hours. This thing's getting lofty. It's getting overbought on RSI on the daily. We're at the top of the Bollinger Band and the 3 ATR level. I just think you got to just hold off a little bit here of entering some new trades just for a little bit, wait for a little bit of a pullback. And if we don't get one, we don't get one. But at some point, the markets will pull back. They always do. They don't go straight up forever. So we play those opportunities when they pull back. Now, that being said, a 112 trade, not the worst idea here because you have no risk to the upside. And if we do pull back even a little bit there, we could land in the trap, which could pay us even more. All right. There's the ES trade. The oil, here we're taking a look at these today. This is, in my opinion, a perfect setup for a strangle. So oil's looking perfect for a strangle opportunity. Had a little bit of a pullback today, which made it even better. I know there's a lot of lines and junk on here. I was looking at this previous resistance level here, which I don't know if we're going to hit it. This uptrend line, the anchored VWAP up in here from the highs, the anchored VWAP from the lows, which is holding us up right now. I think sets up perfectly for a 112 trade and for a strangle trade. Modeled those out today for everybody. Gold, same thing. Look, this is perfect inside of this trading range. Gold's been consolidating in this range for quite a while now. So if we're looking at this gold, look at this consolidation. And when it happens, like it happened back here from September to December, but then the breakout was strong. Now we're consolidating again on this thing. It's been quite a while. This has gone on since April, May, June, and now into July. Strong consolidation. It's a perfect setup for strangle. And the 112 trades work really, really well here. A Jade Lizard would also be something you could do. So really good trades there. So because I don't see a lot of opportunities on ES itself or on S&P, oil, gold, they have just been paying and printing. And another one that I think looks really good here is taking a look at what's going on in bonds. I'm going to draw one more line. And this is not perfect at all here, but it's actually not bad though. Look at the range that this thing's been in. Okay, so here's the range on ZB on bonds. It's bounced everywhere from 111 to 115, but that's a pretty good range. It's dead in the middle, right at the 21 EMA, the 50 EMA. RSI is at 50. It is a perfect strangle setup in here for bonds. And then actually on HG, we took a look at this today with IVR being elevated, having this big move on the tariff news that's out there. I would define the risk here, but I don't think that a call credit spread's the worst idea in this. I think we could be a little bit overdone. And if we're looking here, we are overbought. RSI, MACD, stochastic momentum is rolling over. I don't think this is a bad spot to throw in a covered call. I would be wary of anything that has risk to the upside. I just don't know how much more upside we have, and we can get pretty far away with this volatility. We modeled them today, some really good trade opportunities. All right, and then in after hours today, Bitcoin. Look at the move in Bitcoin today. We called this out to our members uh, earlier in the day that, hey, we're in this trading range. We're trying to break through the trading range, and we did yesterday. I think we could easily see, and this was from 100 to about 110. I think we could go to 120 in this in a pretty short period of time. And today it's trying to do it all in one move. We're at one almost 117 right now trading 116, 116,200, something like that right now. I mean, this thing is making a monstrous run today, and IBIT, which is one we hold as well, having a good day. Look at the after hours take on this thing. We're going to open significantly higher. MicroStrategy, which we also own. I mean, I really like Bitcoin. I'm solid on Bitcoin. I own it everywhere. And this thing looks to also be taken off. It was consolidating. I look to see this breakout. Maybe we run a little bit higher here. It's going to be perfect for us. So let's look at, though, what I think are two interesting trade ideas. So we know about the 112s. Those have been just paying for me. They've been paying all year. We're doing really, really well on those. We're up some almost $15,000 on just the 112s alone on the year, which is great. So, April we took like one or two losses on it, and then we've won every other one. So we're doing really, really well on those. So we're up about 15 grand on 112s. We are up on other 112s on other futures. We're up 20 grand on zero DTE. We're up 5 grand on 120-day naked puts. Those are all up. The only thing we're really down on is we're down on some of the SPY leaps that we closed out back in April because we just wanted to get out of that trade and move our money into a different direction, which we have done. So that's been paying off, and we have been screaming our way higher since then. But let's take a look at the income format cover call. Again, I know maybe we've covered these a bunch. I want to give you a different way of looking at this. And why did this come up today? Well, people were asking about Tesla. Why not Tesla? Well, Tesla's got earnings coming up here. So earnings coming up on the 25th, 14 days away from earnings. And Tesla earnings have not been great conference calls at all. Earnings have not been great for Tesla. So can it pull back? Is this the time to get in as it's moved down here? I don't know. There's a lot of stuff going out there. Elon is not helping his stock whatsoever, but it is definitely overbought. I think there's opportunities in Tesla here. But what about earnings? And well, what about Tesla going down even further? So let's take a look at what would happen if we did the income poor man covered call on Tesla. And let's look to see what would happen if this thing goes to zero. All right. So let's pop over into the trading account. Okay. So hopefully you can see the trading account. You can see how we did on the day today. Good day today, up a couple grand on the session as well. We also do have a current Tesla naked put running. That's up 28% now in 13 days. We'll take that. And then we're up doing great on UNH, the SPY and QQQ, MicroStrategy, IBIT. This is going to even go even higher tomorrow with MicroStrategy and IBIT. We're doing great on those. And then we have been just generating cash. The only thing we're sitting on here on the ES is lots of put debit spreads left over from all of the wins on the 112s. And here are still two naked puts that we still have to come off 80%, 48% on those. So we're in good shape. All right. Not that you care about the trading account, let's actually get into trading a Tesla poor man's covered call. And I think what we'll do is I'll try to put this on paper for you a little bit so you can remember what we did. But we're going to go out a little over a year. We're going to go out this 435 days, September 18th of next year. I'm going to buy the leap, or the leaps. So I'm going to buy the leap on this thing. And right now, that leap is right around 120 some bucks. on that. So 100 and let's call it $125. Okay, this is the September 18th, 2026 leap, call leap, and I'll share this with you in a minute. This is the 220 strike for, let's just call it $125 a share. Right? And that is going to give us, okay, if we take the 220 from the 309, it's about 89 from this, gives us about $35 worth of extrinsic. So let's call, and we could look right here anyway, but telling us right now that this is 35.95, so 34.95, $35 in extrinsic. Okay. And the cost for this is, let's just do cash, normal cash of 12,480, but it's only 8,500 on margin. Okay. All right. So that's what it looks like. In fact, let me tweak how we're sharing the screen here, and we can do this a little differently. All right. So still see the screen. We're in good shape. Right. Here's the trade. Here's what we're looking at right now. So you can see what this whole thing looks like right now. So this is the Tesla version. Okay. On the income form and covered call. We're going to do the September 18, 2026 call leaps, the 220 strike for $125, $35 worth of extrinsic. The total cost is 12,480. I mean, if you want, let's make it easy. Let's make it to 12,500. Since we rounded everything else, and about 8,500 if you're using PM margin. All right, there you go. That's what it costs to get into this trade. All right, now let's go ahead and do it. Well, let's do a little math on this for you. Okay, this is 435 days. Okay, right? 435 days. Let's divide that by 7 is 62 weeks. Okay, so this trade, technically we could keep it on for 62 weeks. I most likely won't leave it all the way till then. I'm usually out about 45 to 60 days prior, or depends on what happens. There's other exit strategies for profits or losses, right? But we got 62 weeks. If we wanted to pay off, the payoff in 62 weeks is what? Okay, so 125 per share. Okay, so we take the 125, we're going to divide that by 62. We need to make pretty much $2.02. So let's just round that to $2 per week. Okay, if we generate $2 per week in extrinsic gains, okay, who cares about anything else that happens? If we make at least $2 a week in extrinsic gains from our covered calls, okay, we will completely pay this thing off, okay, in 62 weeks. If Tesla goes to zero, we'll actually net nothing, okay, Tom, why would you do a trade? I'm talking Tesla going to zero. If Tesla stays at 200 or more, okay, we're going to lose our extrinsic, okay, but this thing's going to be worth, okay, at 200 or more, we'll keep our value, right? So the intrinsic on this thing will be pretty good, right? So we just need Tesla to stay at 200 or more, okay, in order to not lose. We'll just lose the extrinsic value on that from where we are, right? But this will be worth a good amount. All right, makes sense. Hopefully this all makes sense for you. So we just want Tesla to kind of stay at this 200 level, and right now we're at 309. Okay, let's even put that in there. Tesla's selling for 309 right now. If it stays at 200, okay, if it just stays at $200, I won't even say more. Stays at 200, it'll be worth what, 100 and 9, right? So it'll be worth 109 because it'll be in the money by 109. So it'll be worth $109 a share. There's 100. Okay. We're gonna keep 10,900. Okay. If it stays at 200 or more. If it goes to zero, we don't lose a penny. Tesla can go to zero tomorrow or in a year and a half or whatever this is, and we won't ever lose a dime if we make $2 a week. Okay. If it stays at 200 and never goes higher, I mean, which means we can drop from here $109. Okay. It can still stay at 200. Okay. Or better. Or if it stays, I'm sorry, if it stays where we are, it'll be worth 109. If we stay at 309, sorry about that. I meant to say 300. Sorry, I got a little confusing there. Okay, if Tesla stays at 309, it'll be worth 109. Okay, at that point. Okay, that'll be our intrinsic value on it. Okay, so that's what we would keep. Okay, so we don't really care if Tesla really goes up or down, but if it stays here, we're going to make even more. Now, let's take a look at what happens if we start writing covered calls on this thing. And we're going to just do 1 week out. Okay, and remember, $2 was all we needed to make every single week on this trade. Okay, $2 of extrinsic puts us right now somewhere around this 292 in the money. Okay, so we're technically in the money right now to get our $2 worth of extrinsic. So we can actually buy on 309 to 292, we can actually buy about $17 of protection. Okay, we're gonna take in we're taking almost $20 here. But all we care about is the extrinsic. If it drops here, okay, we don't lose any money. Okay, if it drops 17 points by next Friday, we lose nothing. Okay, if it goes up or down, either way, we're going to keep our $2.35 of extrinsic. Okay, a little bit more than we needed, but we'll be fine. So let's take a quick look at selling. And we don't even care what the price is. Let's just say $2 a week, okay, of extrinsic is the goal. Now, if we want to sell at the monies and take in, if you're at the money, the extrinsic's $8. Okay, if we just sold it at $8, okay, we would do great. $2 worth of extrinsic is $200 per week. Okay, times 62 weeks. Okay, 12,400. So if Tesla doesn't move, okay, we make money. Tesla drops to 200 or goes to zero. Okay, doesn't really matter if it starts dropping to zero. Okay, we'll offset our entire cost. Okay, so either way, we're in great shape. We offset our cost, but if Tesla's worth, let's just say it never goes up from here. It stays at 300. Okay, who knows? Well, what it's gonna what it's gonna be at. Okay, we're still going to own money, and now we're actually looking at something in the neighborhood of a $23,000 gain on $12,000, which is around a double. Okay, so $23,000, okay, divided by 12,000, okay, almost a 190% return, almost a 2x return on this stock. Okay, that's what we're looking at on this. If you would happen to sell just $3 a week of extrinsic value, who cares what the market does, up or down? If it goes up, we're going to be losing on some intrinsic from the covered call, but we're going to gain that on the long shares. Okay, we would make 300 a week times 62 weeks. Okay, which is what, 18,600? heck of a gain. If Tesla goes to zero and the long calls are worth nothing, okay, the long calls aren't worth anything. We're still going to make $18,000 on our original 12.5. So 18, was it 18,600 minus the 12.5, $6,100 divided by the 12,500. Okay, we're going to make 49%. So 49, whoops, come on, 49% return here and on this one. Okay, and that's just if it goes to zero. If Tesla goes to zero and we make, and this means we can sell in the money. Okay, if we were doing that, we would be somewhere around this or even this to get $3. Okay, you would still be selling in the money every single week, generates you a 49% return. Okay. Oh, but Tom, you're capping your upside. Well, no, I'm not. I'm still going to make this money no matter what. I will always make my extrinsic. Okay. I will lose some intrinsic if we keep going up, but the base is going to keep gaining. Okay. And it's going to gain more than I lose on the intrinsic. So this amount here is going to get bigger. Okay. And I'm still going to make this, which is going to put my profit level into a whole different realm. All right. So I hope this makes sense. It's an idea on Tesla here. I'm not saying that you should go out and do this ahead of earnings or something like that. Okay? But I want you to just get a sense of this is what we're doing on that. So when it's used in conjunction, don't make it the only strategy that you do. Nothing should be the only strategy you do. Okay. We got the 112 trade. We got these income forming covered calls on SPY and Qs. We're also doing them on a couple select stocks. Okay. We don't care what the underlying does. Like I said, it can go to zero. Okay. And we can still make money. Okay. I just showed you how if it can go to zero, we can still make 50% this year on Tesla going to zero. I think it's a great opportunity trade. Add some naked puts, look at some put credit spreads, some other premium selling strategies out there. And I think you can really create a well-oiled machine to keep generating cash flow for you. All right. So that's how we're trading. That's what we're doing right now. Sticking to, and we're still in the strangles. We just closed out the last strangle we had. So I've got plenty of strangles to add on. I just went through them today with you. Oil, gold, bonds, all strangle opportunities. We'll be getting strangles back on, loading those up. Been a great profitable trade for us. All right, if this was helpful, click the like button down below there. I hope you got at least something out of this. If it sparks a little something for you and you want to take a look at it, do the research, test things out. Don't just jump in, start grabbing stocks out there. You've got to look for something that I think gives you the right setup. And if you find that stock that's got some good volatility to it, it's got great strikes, good liquidity, okay, and the chart looks halfway decent, okay. But even then, I think you should go for it because I think you want to make sure that the stock over time is going to go up, which is why I like indexes more than individual stocks. But I just did an example on Tesla, so I think that's a great opportunity for you. All right. Have a great rest of your evening, everybody. We'll see you later. Take care.